Right, hello everyone. Zaheer Anwari here on behalf of the dynamictrader.com. Just going to share my screen. Thank you. Can I get a quick hands up that you can hear me and you can see my screen okay? So I am sharing my eSignal platform. It is blank at the moment. There's nothing on there. I'm going to do something a little bit different today. I am looking in the chat room. Hello guys. Can anyone, is anyone actually paying attention today? Anyone going short for euro dollar? No, short for euro dollar is not the right thing to be doing at this point. Administrator, am I good? Am I live? Screen blank. Okay, yeah, the screen's blank. That's fine. I want to do something a little bit different. So just let me know if you can actually see me writing on the screen. So can you guys see that? It should say hello on the screen. Can you see that? Let's just go back here. Yes, no, can you see me write hello? Did you just see me write hello on the screen? Yes or no? Yes. No, hello. Oh, okay, that's strange. All right, so that's not going to work. Fine. All right, well, we'll just have to stick to the usual format of just doing the analysis as we do. Okay, so let's go to these. Let me just go to my normal page. Okay, yep, I mean, it's all sort of reversing at the moment, isn't it? There's not really much going off in terms of trends. If we start with the US dollar, Canadian dollar. So if we look at the US dollar, Canadian dollar, what we have is, okay, if you look at my screen, I have a 4-screen setup, my watch list on the left-hand side, monthly in the top, weekly at the bottom, and then daily in the right-hand side. Now, when it comes to the weekly and the daily, I look for trend direction and alignment. And one way of doing that is to look at where the 50 moving average is. So if I just open up the naked chart, and if I go onto the weekly, and if I load up the 200 moving average, and also if I load up the 50 moving average, so let's just go here, bring up the 50 moving average, change this to 50. What we have on the weekly is that price is trading below the 200 and price is trading below the 50. I use the 200 to give me the bias, and I look at the 50 to give me the trend. So what I'm looking for is a bearish bias and a bearish trend. And we have that on the weekly chart. And this is looking at the Aussie dollar, US dollar. If we go to the daily chart, I got the 200 moving average on there. But let's also bring up the 50 moving average. Change that to 50. Both of them are simple. Both of them are based on close. And you can see that on the daily chart, we're below the 200 moving average, but we're also below the 50 moving average. So we do have a bearish bias and a bearish trend on the weekly, a bearish bias and a bearish trend on the daily. However, if we open up the chart, we can see that price is very much in this area of consolidation. And so for that reason, we really want to be standing aside. And if I just simply get my support and resistance tools, so if I draw resistance at this point here, support at this point there, and also support at this point here, we can see that price is stuck within this level. So for that reason, the Aussie dollar US dollar is not one that I'm particularly interested in until it breaks out. Ideally, we want to see a breakout to the downside because the trend is very much down. You can see from the bias below the 200 moving average that price is in a bearish bias. But we want to wait for the right setup, and that will be when we get a break of this support level. If we move to the US dollar Canadian dollar, Okay, what do we have? Well, we have on the weekly, we can see that price is trading above the 200 moving average, giving price a bullish bias, and price is trading above the 50, giving a bullish trend. So that's looking good. We are in a pretty deep correction to the downside. So we had a tram tracks formation or a bearish engulfing chart pattern, whichever one you want, and we can see weakness at the downside. And price is now trading below 1.40. We were looking for this level to hold strong as a support level, but it's now broken below that. If we go to the daily, trading above the daily 200 moving average, giving price a bullish bias, but it's now testing the 50. Now remember, these levels act as zonal area, so this is not a guarantee that we are going to see further weakness to the downside. It's not guaranteed. If it closes, there is a strong sign that we could see further weakness. Why? Well, we had weakness to the downside. Price bounced off the 50. Potentially what we're seeing now is a bearish engulfing chart pattern below 1.40 acting as resistance. That's a strong possibility that we could see further weakness down to the daily 200 moving average. If it breaks the daily and if it breaks 1.3, then we could then say that we are now in a bear market and a trend reversal. Ideally, we want to see this zonal area hold strong. We still have a support level here. So if I get the tool extend right, we've still got a support level right here. And that's where price has come to. It's really testing that support level. If it holds and we see a bounce to the upside, then we could see continuation. If it breaks above this and 1.5, then we could see continuation of the long-term bullish trend. So it really is a matter of patience and holding our horses and seeing what price dictates next. Okay, let's go to the euro dollar. Now, I just heard someone say we should, is it time to go short or is it time to go long? Let me just go back to the chat room. Hi, Todd. Thanks for joining in. Okay, P Concha. I hope I'm saying your name correct. Anyone going short for the euro dollar? Okay, if we look at the chart, why would you be looking to go short? I mean, if you look at the move of today, we've had a move to the upside. So why would you be looking to go short? I don't understand the logic behind that. So let's understand why you shouldn't be going short. Well, first of all, we were in a long-term bearish trend. It's going through consolidation. This is on the monthly chart, by the way. Okay, so we had a long-term bearish trend going through consolidation. So really and truly, we don't want to be trading until it actually breaks out of this level of consolidation. So the euro dollar is not something that you even want to be trading. On the weekly, trading below the 200, so we have a bearish bias, but we can see that price is really now trying to push through the 50 as well. So we could be seeing a bearish trend, the start of a bearish trend. If you look on the daily chart, we're above the 50, so we have a bullish trend. Sorry, a bullish trend here. I hope I didn't say bearish. Okay, so we got a bearish bias and we got a bullish trend with price trading above the 50. And here we are in a bullish trend with price trading above the 50 and also looking to break through the 200. So also giving us a bullish bias. Either way, you don't want to be going long or short on any circumstance. Okay, if you're short-term trading, which I think you probably are, and you're trading on a lower time frame, then that's a different approach. But you have to then look at how long that trend is going to stay in play for. Are you going to really get the profit out of it that you want as a trader? Is it worth the risks? Are you risking large on a small move? Are you working on a 1-to-1 ratio? Well, then 1-to-1 ratio, you hit your target on this trade, but you don't hit your target on the next trade, you cancel it out. So there's a lot of hard work and a lot of time that goes into day trading with very little returns. Okay, so for that reason, the euro dollar is not one that is particularly interesting. Let's go to the pound because I've seen someone talking about the pound as well. Let's go back to the chart. Where did I see the pound? The pound looks really bullish. I will wait to short. Okay, that again, the pound looks really bullish. I will wait to short. What people are doing here is looking for reversals. Okay, 15 minutes still going up, but it will bounce back. That's a very definite statement. It will bounce back. How do you know it will bounce back? You know, there's no guarantee that it will bounce back at all. It's let price tell you whether it's going to bounce back or not. Price could continue going up. If it was that easy to know whether price will be doing this and is going to be doing that, then, you know, the success rate in trading would be far higher than the 5% that, you know, actually become successful at trading. You know, a lot of people blow accounts trying to predict tops and bottoms and trying to, you know, go in the opposite direction rather than going in the direction of the trend. Okay, so going to the pound dollar. Well, what do we see? Well, if you open up the monthly chart, well, price is just in this long-term consolidation, but it's quite a high consolidation because this is around 1.7, and then the low is around 1.4. So you're looking at a range of around 3,000 pips. So within a range of around 3,000 pips, you can see trends. You can see very good trends. But on the weekly, below the weekly 200, below the 50. So that's looking positive. So we have a bearish bias and we have a bearish trend. But look at what's happening. We're seeing strength to the upside. On the daily chart, trading below the daily 200 moving average, trading below the 50. So we have a bearish bias and a bearish trend. So we're bearish on both in terms of bias and trend. But in terms of what is happening, we're seeing strength to the upside. To just sort of guess the end of this is it's not the best way, because this could quite easily continue up to the 200, break the 200 and continue into a bull market. Okay, you may be looking at support and resistance on a lower time frame and trying to see the end of these moves, but then on the lower time frame there's a lot of support and resistance levels, and most of them are weak levels. Price will just generally shoot through those levels. So if we go back to this monthly chart, and if we look at, if I just sync up the charts, what am I looking at here? We're looking at the pound. Okay, so if you look at the pound, we can see that price is now bouncing. The reason why it's bouncing is because it's faced with a support level right here. And you can see that price has bounced from that support level quite significantly. So the pound dollar is just basically no man's land, another currency that you don't really want to be trading because there's no clear direction. We're seeing bullish strength based on support, but we are saying the weekly and the daily are suggesting weakness. So not one that I'd be particularly interested in. Okay, let's go to Felix the cat. Hi Felix. Is it a retracement or a reversal on the pound dollar? I don't know. I really don't know. I mean, it's a good question, and the answer is I don't know. I mean, we could take our Fibonacci levels. So let's say we get our Fibonacci's. Bear with me a second. So let's get our Fibonacci retracement. And let's take Fibonacci from the start of the trend to the low of the trend. So there's my Fibonacci. Sorry, it's not great. I haven't drawn it exactly how I would like. There we go. That's more like it. Right, there's our Fibonacci. It's broken through 0.382. So that's your first point on reversal. It's broken through that. It's still coming to 0.5 and potentially a cluster at the 50. So this will act as a resistance zone. If it breaks through that, then it's faced with 0.618. If it breaks 0.618, it's going to go through to 1.5. I mean, I don't know what price is going to do. Right now, it's suggesting that it's going up. Until it actually suggests weakness, there's not really anything that I could say other than this is not something you should be trading. The foreign exchange market in general is not something that people should be trading in. The problem is that people get enticed into short-term trading. And, you know, because short-term trading suggests that you can target, you know, a certain number of pips every day or every week. That's the general logic with day trading. People want to make 1,000 pips a week, or 10% a month, or £2,000 a month, whatever their salary is, they try and replicate that in through day trading. And that's generally how it's sold as a way to escape the 9 to 5 and escape the rat race. And the thing about trading is that it will give you that. It will. There's no doubt about it. Unless you are going to create the next mega billion-dollar app like Instagram, or come up with the next product that everyone wants, there's no better way out of the system, and there's no better way to generate consistent wealth than through trading. But day trading is not the way forward. Scalping is not the way forward. You can make money from it. I'm not saying that you can't, but you have to think about the downside of day trading. You know, the time in front of the screen, the stress, the amount of trades you have to take. You know, sometimes you have to risk large. It's not adaptable around a lifestyle like working 9 to 5. Most people, I'm assuming, have 9 to 5 jobs. If you've quit your 9 to 5 job to become a trader, then that's very dangerous territory. Don't quit your 9 to 5 to become a day trader. And that's another, I hear people do that all the time, but it's a very, very risky choice. Get a good salary and leverage it through trading. And then when you come to a point where you've built an account where you can sustain a lifestyle, that's when you can quit your 9 to 5. It's a journey. It's not just a decision. You don't suddenly just decide, I'm going to be a trader. Okay, let's go down. What are those green and red lines? Thank you. Yeah, Felix the Cat, not a problem at all. Let me just move down. Should we anticipate moving lower? Todd, I am potentially, the way price is set up, the US dollar Canadian dollar suggests that it is going to move lower. But again, let it tell you that. So how can we tell that the US dollar Canadian dollar, I'll come back to your question in a second, Felix the Cat. How can we tell if the US dollar Canadian dollar is going to go lower? Well, we've got a support level here. It's not in the best place, but it's roughly about there, right there. If it breaks that support level, then we could see further weakness. If this support level holds strong, then we could see further strength to the upside. It's as simple as that. At this point, I'm not going to dictate either way what's going to happen. I'm going to let price make its move. Okay, I hope that answers your question. Felix the Cat, what are those green and red lines? Are you talking about on the monthly chart? Yeah, I think you're talking about on the monthly chart, right? Let me go to the monthly chart. You're talking about these red and green lines, right? Right, so these red and green lines, they're basically what I consider major levels of support and resistance. See, if I get an idea, okay, if I just go back to the chat room, Felix the Cat, Todd, whoever's listening in, could you tell me which software you are currently using? Are you using MetaTrader? Are you using TradingView? Are you using your broker software? Are you using TradeStation? Could you tell me what software you are currently using? Okay, thanks, Todd. MT4. Okay. I don't know. I mean, like, I really don't know who sort of participates in these webinars at all. TradeStation and MT4. Thanks, Felix the Cat. Okay. Right. Now, the problem with MT4 is that it lacks quite a lot of functionality. So let's take, for example, support and resistance. You have to draw support and resistance on every chart that you're looking at, and you have to do that manually. Thanks, P. Concha. Okay, fantastic. So you're looking at, let's say, for example, if we're looking at the US dollar Canadian dollar. Okay, so what you have to do is you have to open up the US dollar Canadian dollar, and whatever chart you're looking at, I know I've got the monthly chart here. You then have to go in, get your support and resistance tool, and you have to draw your support and resistance on the chart manually where you deem there is a level of support and resistance. And you have to do this manually on every single chart that you're looking at. Am I am I correct on this? Can I get a quick yes or no? Market scope, yep. FXCM market scope, yep. From what I understand, that's generally what you have to do. You have to draw your support and resistance manually on every single chart. Now, what that means is that it's quite time consuming. Drawing support and resistance on its own is quite time consuming. And then you have to do that on every single chart. So what then tends to happen is that because of the amount of labor involved, the amount of time involved in drawing support and resistance, people naturally reduce their watch list. So if you look at my watch list, you'll notice that I've got pretty much all the currencies available to me. So Aussie dollar, US dollar, all the way down to the South African rand, Japanese yen. I keep an eye out on all of these. So I've got all the majors, their crosses, and the exotics. Does that mean I trade all of them? For example, the Hungarian forint, the Chinese yen, the Czech crown, I don't trade them. They're there. They're on my watch list, but I don't trade them. But the point is that I may trade them in the future, depending on how they set up. But even my watch list, let's say, for example, you take away the exotics, my watch list is pretty extensive. A good 40 currencies on there. That's a lot of work to draw support and resistance. And then I also trade stocks and I also trade commodities. So if you look at stocks, there's 12,000 stocks in the US stock market. How are you going to trade all those stocks? You know, how do you know where the best opportunities are? There's a lot of work involved. So by having good software that removes a lot of that manual labor, I don't actually draw support and resistance. So going back to your question, Felix, these are support and resistance. So, and that's based on an algorithm. So there's a logic to why this is a major level of resistance right here, and why this is a major level of support, why this is a major level of resistance, why this is a major level of support. There's a logic to it. There's a logic behind this algorithm that works within eSignal. So what that means is that if I change the chart, let's say I go to the euro, and if I click on euro, you can see now that the, oh, sorry, EURA0-FX. So if we look at the euro dollar, you can see now how the support and resistance levels automatically update themselves. Okay, so if I want to look at the Japanese yen, yeah, and Japanese yen, you can see the support and resistance automatically adjust for themselves. If I want to look at a stock, let's look at the Marriott, for example, and you can see how the support and resistance have changed for the Marriott. The Marriott is a stock that I traded along this bull trend, very profitable run. Okay, if we look at another stock, let's look at KR. This is another stock that I traded, very profitable stock. So you can see how the support and resistance will change simply by putting in the symbol of the stock or the commodity that I want to look at, or the currency that I want to look at. It works at anything. And I could do that on any stock market in any country in the world. And you can see how quickly it saves time. Yeah, thank you. Yeah, it's a very useful tool. Trading is about, yeah, exactly. Trading is about saving time so that you can get on with your lifestyle. I mean, if you guys think about it, what is the main reason why we all turn to trading? The main reason we all turn to trading is money. That goes without saying. Whatever anyone else says, it's about money. That's what we want. We want more money. We want the better lifestyles. We want to afford the better things in life. You know, we don't want to be driving Ford Fiestas for the rest of our life. We want to move up. We want to move up to the Porsches and the Lamborghinis. That's ultimately our goals. But then as you start progressing through your trading journey, you'll realize that actually trading is far more than just money. It's about empowerment. And the older you get, you realize that actually it's not just about the materialistic things in life. It's about the more important things in life. The more important things in life are time. Time with your friends, time with your family, time with your wife, your children, time to go out and travel more. You don't want to be restricted to 20 days of holiday because that's what your employer is telling you. Yeah, exactly. Right? You want to have the money. You want to have the time to be able to spend the money. That's what and that's why trend trading is so powerful. Day trading won't give you that. You know, you may become a day trader and you may become a full-time day trader, but ultimately you're giving up one 9-to-5 job for another 9-to-5 job. It may be at home and you don't have a boss, which is great, but you're sacrificing time. The whole point of trend trading is that you don't sacrifice anything. People think that because I trade for about 15 to 30 minutes a day, sometimes less, that I'm compromising on profit. But my routine is to prepare for the week ahead, starting at the weekend. So I spend an hour at the weekend going through the foreign exchange market, going through the stock market. I build my watch list at the weekend, so I know exactly which currencies, which stocks I'm looking at, commodities. I also know which strategy I'm going to use. I know where my entry points are going to be, how much I'm risking, my exit management. I have all of that pre-planned, pre-thought out before the trading week starts. Sunday evening, I'll put my first set of orders in if I'm able to. When I say able to, that means if the market dictates. And then Monday to Friday, I just manage those positions and I enter compounds or new trades. And that takes minutes a day. And when I first started trading, which was 2007, that whole approach, the whole style of trading could be adapted around what I was doing. I was a photographer and I was working very, very long hours. So I needed a style of trading that could be adapted around what I was doing. When I quit my photography and I became a full-time trader, which was in 2011, I was still only working 15 to 30 minutes a day as a trader. I now had the rest of my time free. So I was able to travel a lot more. I had the money to do nicer things, buy nicer cars, spend more time with my family, my girlfriend, all of those things that I wanted. So, look away from day trading. Start investing into it as a business. Todd has asked a very good question. What platform do you recommend? The software that you can see in front of you is eSignal. The tools that you can see in front of you, these are proprietary tools. These are tools that have been developed by the Dynamic Trader. This is the community that I'm in. I'm a senior member of the Dynamic Trader community. This is just one of the hundreds of tools that we have as dynamic traders. I have an inbuilt scanner. I have an inbuilt money management system. I have trend filters. I have specific entry points. I have trailing stop losses on the screen. I have pullback strategies. I have breakout strategies. I have a scanner for breakouts. I have a scanner for pullbacks. I have a scanner for lower time frame entries. So that's, when you get more advanced, for example, I know how to enter on the 1 hour time frame. I could even enter on a 15-minute time frame, but I would be in that trade months later and repeatedly compounding into that same trend. So the entry point into a trade is just the start. There's a whole art to trading that's generally overlooked because people think they can get in and get out, make a bit of money, get rich and retire. But the stats are very real. 95% don't ever succeed in that. So you need to look at what the 5% are doing and you need to mimic them. That's what I did. Okay. Are there any questions? Because when it comes to the foreign exchange market, from a trend trading perspective, it's all very, very, very quiet. The markets are quiet. This is a time where you should be looking at protecting your money, not actually exposing risk to the market, because this is where you're setting yourself up for potential losses and big losses, especially if you're looking for reversal trades. I mean, it's not the best way forward. Okay, are there any questions? This is your opportunity to really pick my brain. We've talked about candlesticks, we've talked about support and resistance, time frames, watch lists, patience. A lot has come up in this half hour. Okay, no. Right, okay, that's fine. Well, I think what I'm going to do is I'm going to call time on today's webinar. It's a short webinar. There isn't much going on, so there's not really much to analyze. My advice to you guys is to really stand aside, protect your money, and focus more on getting your trading right. Remember, a good trader trades when it's right. A good trader doesn't trade just for the need of trading. Okay, here's a question. Thank you. How do you build up a trading plan? Okay, good. Good questions coming through. Thank you. Something that you guys need to understand is that I really enjoy the interaction. I know we're interacting through screens, and I can't see you, and you can't see me, and I can't hear you. But I enjoy this interaction. That's what trading's about for me when it comes to these webinars. And not so much for, hey, look, I'm going short on the euro dollar. No, understanding how to turn this into a profitable long-term business. Okay, you have to remember that your short-term trading only feeds the broker. The broker is going to encourage you to day trade. The more you trade, the more commissions they get. Their interest is not you. Your own interest can only be taken care of by yourself. So you need to ask yourself, why are you being encouraged to day trade? You know, investors, long-term investors like Warren Buffett, traders like Jim Rogers, the turtle traders, the ones that really generated vast amounts of wealth, they never day traded. You know, and that's what you got to look at. Any thoughts on the New Zealand dollar, US dollar? Well, yeah, I've always got thoughts on the New Zealand dollar, US dollar. If we start with monthly time frame, see that we're in a consolidation. The pink lines represent the high of 2015, the low of 2015, and the close. So if trading above the high, then it's a bull market. If trading below the low, it's a bear market. And if it's between the pink lines, it's generally a consolidation. So for me, this is simply a consolidation. If we go to the weekly, below the weekly 200, below the weekly 50, so that's good. However, if we look at the daily, below the daily, but we're now pushing through the 50. So the 50 is currently acting as a level of support. So for this reason, you can see that price just in a long-term consolidation. Sorry, let me just do that again. Just open this up. Price is just in a long-term consolidation right there. We had a trend to the downside from September till now, just going sideways. Nothing going on. Okay. So that's my thoughts on the New Zealand dollar, US dollar. What do you think of the Japanese yen? I think the Japanese yen as well, pretty much the same. Let's bring up the Japanese yen. Start with the monthly time frame. Look at the Japanese yen. It's faced with major resistance. It's tried to push through it, but failed on several occasions. We're now seeing weakness to the downside. If it clears this low, that's the low of 2015, then we're in a bearish market. For now, it's in a consolidating market, not one you want to be trading. If we go to, if we go to the weekly, well, we're below the 50, above the 200, below the 200, below the 50. So it is starting to suggest some kind of alignment, but we really need to see price break out of this support. So if price breaks this support here, there's a strong support level right here. If price breaks through this support, then we could see good weakness to the downside to the weekly 200. But for now, standing aside. Okay, I hope that makes sense. Let's go to the trading plan. Okay, good question. Don't most people start by day trading and then move to trend trading when they have more capital to trade? Yeah, I mean that's a common approach to trading. So what they think is that, okay, I've only got £1,000 or $1,000 wherever you are, and I'm going to day trade that to $10,000, and then when I've got $10,000, I'm going to trend trade. If 95% fail, how many people are successful at turning a £1,000 pot into a 10,000? That's 1,000% increase. $1,000 to $10,000. That's 1,000% increase. If Warren Buffett gets 20% a year, which day trader is going to get 1,000% increase from for one person lucky enough who advertises himself all over the internet that I turn $10,000 into 2 million in 1 year. For every one person that does that, how many people fail? You know, you've got to be realistic about this. You've got to come in with the right investment. The only way you come in with the right investment is by having a good job where you have savings, you have a salary, and you treat it like a business. Trading is a business. How much would you recommend to start trend trading? You need about £2,000 realistically to to have good position sizing. So I would say £2,000 or $2,000, depending on where you are. So for good position sizing, good well-placed stop losses, no more than 2% risk, $2,000 in a micro account or £2,000 in a micro account, that's a good amount to start. But remember, you then want to look at the other elements involved. Software. Software may cost you $100 a month. Good software, $100 a month. This is a business. Tell me which business in the world has overheads of $1,000 a month and can return you the kind of returns that trading can give you. There is no business in the world that has $100 a month overhead. Most businesses have office rent, have employees. There's a whole manner of overheads that go into running a business. Even if you're running your business online, you have costs. An online business has costs. Servers. A server will cost you anywhere from $1,000 to several £100,000 a year for servers. Okay, so you do need to come in with a business mind, but remember the overheads are low for the rewards that you can get. You also need to play the long game. You can't come in with the idea that I'm going to flip £1,000 into 10,000 in a year. It's not going to happen. And it may happen. It may happen. Of course, it may happen, but there's a very good chance it won't. What are the correlations between business and trading, in your opinion? Okay, so a really good question. First of all, they both need investing. All businesses need investing. Trading, you need investing. You need to understand. You're not going to open up. You're not going to start a business without understanding your marketplace. You're not going to start an app without understanding whether there's a demand or a need for that app. You're not going to go and open up a shop on a high street without doing your research and wondering whether there's a demand or a need for that. It's the same with trading. You need to understand your marketplace, understand how trading works, understand how to read the charts, understand how to read price. Businesses are generally for the long term. No one gets into a business and thinks, I'm going to just run this business for 6 months and then get out and get rich very quickly. No one does that. Everyone creates business because they're in it for the long game. They want to establish themselves. They want to, if you want one shop, you want to build that into 2, 3 shops. So there's a lot of similarities between trading and a business. Trading is a business. How much effect does news play in your trading play? None. It's plain and simple. I don't look at news. I'm a long-term trend trader, first of all. And secondly, I'm a private trader. What you guys need to understand is that, news, the institutions get the news well before you. The big dogs. They pay thousands of pounds a month to get news early. You're on the outside. By the time you read it on any website or news, even on the news when someone's reported it, or I don't know what people, what do you call that? Forex Factory, any of these sort of websites. News is old. So what that means, it's already been factored into price by the time you hear it. The smart thing to do is just stay away. We got NFP on Friday. I saw a comment earlier that we need to watch someone to trade NFP on Friday. How is making 20 pips on NFP going to make you rich? How is that going to change your life? What have you achieved by making 20 pips on one news item that comes out every month? Okay, you've got it right, and there's the excitement of get it right, but the next month you'll get it wrong. You're not going to get it right every month for 12 months. It's pure gambling. I keep my computer closed from the Wednesday. So Wednesday, Thursday, Friday, no trading. That is if I have trades in play and the trends are behaving well. There's no trading. Wednesday, Thursday, Friday, I keep my computer closed. It means I have an extra long weekend. Monday, back to normal. Okay, Todd, I hope that answers your question. Do you do only entries on daily? I know I do some of my entries on the weekly as well. When you start getting into bigger account sizes, then you want to start moving your trading onto larger time frames. So for example, if I'm trading on the weekly chart, I only need to look at my trades once a week. If I'm looking on the daily chart, I look at it once a day. To be trading on the weekly chart, you need to have the account size that allows you to position size. But I've been doing this since 2007, guys. I've built up my accounts over the last 8, 9, 10 years. So you've got to be realistic. What are your goals? My first goal was to become full-time so I could quit photography. That took me almost 4 years. Our current community members are doing it within 2 years. We've got community members who quit their jobs last year, and they're full-time traders. One of them's Miguel. You've probably seen him do Periscopes. I don't know if you're following. Are you following me on Periscope, guys? Can I get quick yes or no if you're following me on Periscope, and if you are on Periscope? If you're not on Periscope, please follow me on Periscope. So download Periscope and search for Dynamic Trader. Search for Dynamic Trader and search for me, Zaheer Anwari. I'm just typing it in the chat box. I'm doing Periscopes daily. These are live broadcasts where you'll actually see my face, and I'm actually doing very, very useful technical, very technical aspects of trading. Yesterday I talked about candlesticks. Today I talked about chart patterns. Tomorrow I'm talking about support and resistance. And we're covering various elements of trading. And I know there's a few people out there doing stuff like this, but no one's doing it from a trend trading perspective. And that is the angle that you want to go down. Okay, so please follow me on Periscope. Please follow me on Instagram. I don't know if you guys are following me on Instagram, but please follow me on Instagram. I put out a lot of information on Instagram. Bear with me 1 second. I put out a lot of information on Instagram on a daily basis. Control V, right, there you go. My Instagram handle is fx.mentor, fx.mentor. We're encouraged to attend special webinars at the time of new events. So really this is by the broker, it's ultimately self-defeating. Yeah, exactly. Those kind of webinars at the time of news events, what are you going to achieve? What the broker wants you to do is get all excited and get into a frenzy and make a few trades, and whether you win or lose, it's not their concern. All they're concerned about is their spreads. You need to be smarter than that, and just don't get caught up in that. Okay, so this is what we're doing here at the Dynamic Trader. We're really getting people to understand the approach of the greatest traders ever, and I'm talking about before the internet. The Dynamic Trader uses the same approach as traders before the internet. The advantage that we've got is software. So traders before the internet drew everything by hand. They calculated the 200 moving average by hand. Everything was done by hand. We now have software. But just because we have software doesn't mean we should change our approach. We still drive the same way when we have a car. We haven't changed the way we drive. We've just got better cars, faster cars, more economical cars. The way we drive is still the same. It's the same thing with trading, guys. You can't allow the internet to take you down a route that is not going to serve you well over the long term. As private individuals, you need to look at someone like myself, who was just like you guys and who is just like you guys. I am one of you. I was an employee. Okay, I was a photographer and I was a freelance photographer, but ultimately I was working. I had a job. I was working 9 to 5, and I found a way out by finding a mentor who was also a private trader. You said that max risk is 1%. So if you say good amount is 2K, would you risk 20 only? 20, what's that? 20 trades? What do you mean by 20, Peter? My maximum risk is 2%, by the way, Peter, not 1%. And the way to look at this is to have a risk exposure. How much do you want to risk a day? So if you're risking 2% a day, don't risk more than 6% a day. So don't take more than 3 trades. I'm still not 100% sure of your question. It's a little bit unclear for me, Peter. I apologize. Could you rephrase that? Okay, guys, I am coming to the end of the webinar. Please have a look at the Dynamic Trader apprentice training that I've created. Okay, here is the link. The price now is £99 for the training. £99 for the training, guys. Okay, so if you look on there, it is currently set at £289, but it's not going to be £289. It's going to be £99. P Contra, have a look at the link that I've just put up there. Have a look at the link. Come to me. Let's talk about mentoring. Let's talk about doing this properly. What you guys need to understand, first of all, before you even start putting trades, is how to read price, then how to look at candlesticks, how to look at chart patterns, how to look at support and resistance. You need to look at all these various elements. I'm going to be doing live training this Saturday and next Saturday, so the 6th and the 13th. I have live training going on. The details are all on the link that I've just sent you. I'll just send it again right here. The link, the details are all there. If you have any questions, please email me at zaheer@tdtpro.com. I will also send you a PDF on trading, which is the almost complete guide to trading. So please email me and I'll send you over a very, very, very useful PDF written by my mentor, actually, Anne Chapman. So I'll send you over that so you can have a look at that. Okay, guys, it's now 4:45. I will also be doing another webinar today at 6 p.m. where I'll be doing a little bit more analysis. So if you want to come into the webinar at 6 p.m., please email me and I will send you the link so that you can register for the next webinar at 6 p.m. today, which is in an hour and 10 minutes. Okay, guys, thank you all. Thank you, Adinda. Thank you, administrator, for today's webinar. Thank you all for attending. Guys, thank you all for the interaction. Todd, Rusty1, P. Concha, Felix the Cat. You know, thank you very much for the interaction, the questions. That's what I really, really enjoy. I don't want to just do market analysis all day long. You know, it's all about interacting and connecting with people. Please hook me up on social media and please email me and let's take things to the next stage. Thank you, guys. Take care. Have a good morning, afternoon, evening, wherever you are. Take care. Bye-bye.